Good morning, Turan. What a great good morning. Hello, everybody. All right. Wild, crazy market, right? Running in place can be so tiring. There's ups and downs throughout last week. And now here we are with markets lower, but not breaking any real significant support here. So, you can see on the hourly chart, is this a head and shoulders bottom, or is this going to be the stall and a measured move lower? And somebody was saying, what the heck is a measured move lower? Well, it's when prices pull back as they've done right here. Right? You've had a run up and they pull back like so, and then they form a reversal like this that fails and not even traded above that high. So we know for sure, just based on price patterns, that there are many long, and I don't, you can't blame anybody for being long over the weekend. That as long as they, calculated risk, share sizing intelligently, of course. This thing gapped up and been ripping higher based on this price pattern of that strong move up, that pullback into this area of support, the 50 MA. I talked about this last week. And letter, on over the last weekend, letter a week ago about the converging moving averages. And so here we had this nice bottoming tail bar that took out the lows. I love those. And, Friday was a bit of a jiggle day, but it was a Friday, but it got above the highs. So, thinking that it could move up and taking that trade would have been nothing wrong with that. But now here we are with this gap down. And so longs have to be in somewhat of an intelligent hope mode, as I like to call it, that this low is going to hold. And maybe it will, where when price is open and this turns into another bottoming tail bar. However, at this point, now that it's down here, historically, it's unlikely that it's going to get above the high of this bar today. And if it does, it's not going to get that far above the high of that bar. Again, this is, I don't know any news events. Of course, none of us do that could come out, and blindside us. But this historical pattern is one in which it will not get significantly above the high of this bar. So SPX call spreads, call spreads up above there. Let's just clean this up and go to SPX for a second. Down below here, this could become, remember, it's going to open, the S&P is going to open up down here, and we still got 25 minutes to go. And so, yeah, it'll bounce from here, but it's going to open here. And if it goes sideways here, let's just say it jiggles around until 10 o'clock, which will tell us that while buyers are down here, they can't lift this off. And by 10 o'clock or a little after, this starts to break lower. The daily bar could look like that. So you want to be real careful about a put spread today on SPX. It's, like I said, a half hour or so going sideways and a break, that's just the start of the move if it starts to break down. Now, on the call side, and let's just go to SPX for a second to get the numbers. So it's going to open down here. So you've got this line of defense, and it's going to be here to get through here. And of course, oh no, not that bar. So we want to just call it here. Let's just go for the no-brainer above 3,500. Opening down here, I would say above 3,500 is free money. Take it with a grain of salt, right? But, historically with a price pattern like this starting here, to close back up above there would be, excuse me, hold on. Very abnormal. However, how far down do we want to go? Well, so if we look at ranges, where's my drawing tools here? Things get moved around. Anyway, if we look at the size of this bar, if we were to just project that bar, since it's such a big one, and we're looking for something so out of the norm. And those that use things like, what's it called? Market profile, right? That kind of thing. And the idea of a bell curve, and something is so far out of the bell curve. Well, in a sense, this is kind of a way of looking at something like that and just saying, in the most recent data, looking at the biggest bar recently, which is this one, right? Not going over here, right? This big giant bar here, 3,500, about 75 points, give or take. And if we were to project that down here, 75 points, and said, well, a put spread down here, let's say the markets are collapsing in the first 30 minutes or hour at 10:30, they're collapsing. Well, during that collapse, as they get closer here, well, now that's where you're going to want to sell that put spread, when it's on the outside of the curve, so to speak. Right? So, down here, you get this giant collapse. NYSE tick is screaming minus 1,300 or what have you. Put call ratios jumping, and at least you get a 5-minute reversal. Things begin to stabilize, and you get away from that danger, so to speak. And those premiums are big. That's intelligently, getting in there and fighting with the tiger, so to speak, because the leverage that these things have. But you're doing it at a point where things are so extreme, and you're getting further away from that extreme. You guys that do these, exactly what I'm talking about, right? So with credit spreads, we're just looking to get away from the danger, right? 33.50, 33.20. So if we just kind of eyeball that down here, yeah, exactly. Trade McGraw. Just assume we do get this kind of collapse today, since it's opening down here, and it runs down for an hour. Not only have you eliminated an hour of time on the day to expiration, you've picked a point in time where the premiums should be really juicy. And you know what we do from there, right? And I said the upside, I would say up above here, since it's starting here, it's kind of like taking the reverse of this big bar and say, okay, if it's starting down here and it rallies, what's the odds of getting a giant bar that size? Well, okay, maybe it happens. Well, it's not going to be above this, but it's not going to be above here. So we're just taking some common sense concepts and forming a plan, right? Without any brain damage indicators. All right, let's see where the rest of the markets are here today. So again, what's going on here this morning? Well, there's red going on. There's no real damage being done. Right? This is sitting right on support. It's, just down. I don't know. I wouldn't be surprised, tell you the truth, to see this rally back up. I wouldn't be surprised to see anything in this market, tell you the truth. It's kind of crazy in the moment as to what's happening, but just look at this price action here, and what happened last week with ups and downs. But look at the candle bodies; they're all in about the same spot. So it was just a lot of movement going nowhere. Yeah, let's take a look at YM. Down 300. Yep. So that's breaking under Thursday's low, but it's a greater than 100% retracement. Where the heck did my drawing tools go? I usually have this little, oh, there it is. I have to move that over there. So it's taken out these lows after coming out here. It's now taking out the lows, and this is typically a pattern, it's a scalper pattern. When I see this on an hourly chart, I then go down to the 5-minute chart and then look for stabilization, and it's beginning to do that. And this is I could give it a shot, You know, it's here pre-market. I really don't like doing that pre-market, but with this kind of a pattern where it's retesting like that, may not be a bad idea as a long. It's a scalper type of, setup where it's just gotten extended. It breaks through support. It then begins to stabilize, and it's a scalper long at that point. Could this turn into a bottoming tail bar? Kind of seems unlikely, but hey, you never know. Maybe you wouldn't have thought this one would have turned into a bottoming tail bar at the time when it was down there. So if it can't rally, of course, that's going to be bearish. Let's look at the Russell. Red day, sideways trading range, wide and whippy. No real damage done. I mean, look at the weekly there. It's just consolidating at the high of this big bar. Maybe we're all going to be bored to death until next week with this election. We know what's been going on. It's just been erratic. All right, Alex. Alex is giving it a shot on the long side. Good job, Alex. I mean, the reasoning is there. Why not? Just control the risks. No big deal. Yep. All right. Maybe just give me a second here. I may as well join you guys. What the heck going on? There we go. Okay. All right. Bonds down at our target, perking up there. Total sense. Look to the left. All right. Look to the left. Look to the left. Support and resistance. Keep it simple, stupid. I have to change this. I didn't want that. Don't even know how I did it. Crude oil down here. Been kind of moving with equities. Just messy. A lot of uncertainty. Gold. Nothing to stay away. Silver. Stay away. And of course, we always look at the transports. Messy, but nothing wrong here. Let's see where today ends up, folks. As I said, this spider's here. They're opening down here, 341 and a half-ish. Right down here near a prior bottoming tail bar, near the bottom of this bar. Buyers have been showing up here each time. They're beginning to show up here. Let's see how far they can take it. Maybe they can do an amazing thing and turn today into a big green bar. Let's see what develops. All yours, Dan. Q's long, good long setup here. Jose, I went long, yes. I think some in the room, someone mentioned that they were perking up, so we're giving it a shot here. We'll see how far it goes. Internals, you got to be a subscriber to the letter, man. I'll show you. They're neutral. Breath came down to a point where things typically in an uptrend, they move up. Sentiment is just below the bearish line, so it's got plenty of room to move down if the markets were to move down. So, again, really not giving us much to go on here. Yeah, Jake. So, I mean, I do this 20-minute video every weekend and just go over the internals. All right, so there you go. They're neutral, but of course, anybody in the green room always welcome to ask, and we cover anything. Go ahead, Dan.
All right, good morning.
Appreciate that, Jason. I think they're all great, but the videos, but thank you for saying it.
All righty. We don't have as many earnings today, although we have a ton for the week. And with the gap, let's go ahead and go over all opens right now. I don't do that when I say everything's fine, but let's go through them today. And we're actually not, in terms of light or heavy, we're kind of actually on the lighter side. All right, weekly options trader, alphabetical here, Autodesk. We have a put spread Friday under the low of the bottoming tail. Citigroup, put spread under the WRB. Costco, a bear call credit spread. So that's working. It's rounding top breakdown. IWM, this was one we put on into the close, and we were willing to take the weekend risk for an out of the money put spread. You know, gapping down. Our short strike is the 157.5. So we still have $3.50 of cushion. So, you know, we'll decide if things do weaken. If they maybe 30-minute low, taking out the pre-market lows, we might consider legging into a couple of condors, but as of right now, nothing to do. Hasbro, we purposely held this one over earnings, a half lot. We closed half at a profit on Friday. We're short the 82 naked puts, so way down here. So even with this gap down, you know, we'll keep an eye on it, but I don't, with the volatility contraction, crush, they call it, we're not going to get hurt. It's still $6 out of the money for Friday. Okta was one we put on Friday into the close. Put spread 10. We have a call spread on the M top. This is an M top with what we call new high plus. Made a new high and got slammed in the face. Big old price void. So yeah, let's keep an eye on this JKS. Remember this wide range, biggest green bar of its life? We said is definitely on my short watch list. And then that one made a new high the following day, and then came a 180 reversal and then some. All right, finally, WIN. We have a put spread on the gap up. That's far away. We got the 70, 65, so that looks fine. We only have 6 open trades in the swing letter. That's, believe it or not, incredibly light for us. APH, we did a half lot into the close, a bull 1, 2, 3. Kerbal, we have a way out of the money put spread, the 110s, way the heck down here. CCL put spread, way the heck down here. We got the 1310s capping down, but you know, still it's way here. Look at 13, it's way down here. LVS on the gap up. We did a put spread, 45s, way the heck down here. We got $5 of cushion. Play, we did a short put. We got the naked $15 puts, and we covered half into strength. And finally, Sedgwick, we're long stock. So I say, yeah, our positions are fine. Some of them, you know, gapping against us here, but there's no panic on anything, so that's a good thing. Let's look at some gappers and earnings. Grill 214, gapping way up here. I don't know. You just got to decide, is that something that you want to keep on your interest list? I don't think so. All right, JKS, yeah, I mentioned. I'd love to sell another call spread on that. Piton, I also have on my list to sell a call spread. Beautiful turn here after climactic sell setup. Beautiful turn. Wednesday is when we put on a new trade. Oliver's asking about Snap. Yeah, that's on our short list to sell a bear call credit spread. Now there's 2 kind of ways to enter that. One is I was hoping it'd gap up $5, and then it would be what we call a gap and crap under a 30-minute low. Secondly, is breaking intraday support, and that would be under this, under 42.25. See this little closing pivot, and then we're going to sell it out of the money call spread. McGraw, I was just reading your comment. All right, let's continue. You know, I wrote in a letter too. It's just, it totally amazes me how the media, like, you know, how I say the media likes to put a theme in people's head, kind of like stringing them along, just like a puppet. And they do that with a story. And the story for the longest time was, well, this one's not fake per se. Well, you'll see what I'm saying. They just put something in your head as a story. And the story for the longest time was, if Biden wins, market's going to tank because increased taxes and regulation. Now, the entire media, and so is JP Morgan, you know, whatever. They're like, oh, it doesn't matter. It doesn't matter who wins. Market's going to go up. You know, doesn't matter. In the cover of the Wall Street Journal today, there's an article that says, oh, businesses are warming up to Biden now, despite those two negatives. That's I don't know what the word is. It's not funny. It's not ironic. It's, I don't know what to call it. All right, Charlie Echo. I don't see where you're gapping, but that's bullish. It's a bull rectangle, as I call it. Here's our flagpole. Flagpole went up, and it's not a flag where it's in a trading range at a 30-degree angle. It's a square. It's a rectangle. So it's a bull flag rectangle, which is still bullish. So that's on the list. BA had earnings. You know, things that rally into earnings. If you get a big gap up, I just as a general rule, my bias short a 30-minute low. This actually was a very bullish close on Thursday and Friday. This is what I call a bull sandwich. The red is the meat. I'm sorry, see, I said it wrong. It's a bear sandwich. The red is the meat, and you got two big green bars engulfing it, and it was a breakout. Breakout daily, weekly, and now it's gapping down on earnings. 8:30. If it can negate, it's a very, very bearish gap because it's gapping under this bar, which now makes it an upside shakeout. But if for some reason this comes roaring back and can negate the gap and take out yesterday's high, then I'm interested in buying that. This is gapping down a little bit. Bullish retracement, bullish consolidation. But now it's gapping down. So that's a call spread candidate. ARLP gapping up a little bit, but I don't like the way it trades. You're gone. AMG. We'll come back to you. Sample, don't like the way it trades. Pets. Gapping down a little bit. There's no great pattern. You're gone. Otis Elevator. It's a big mess. Look at all these overlapping bars. That's a mess. Hasbro, that's the one we talked about. We have half a lot of an 82 short put. CBU, I can't tell where you're gapping, but you're a mess. Dunking, Coffee Man, they're talking about taking private at $106. Now, I just have one question for the suitor. What were you doing in March? Why did you not want to buy this donut shop when it was on sale? Why are you buying it now at all-time highs? But I'm not the suitor, so it's not my problem. But you know what? I'm curious. Let's you know, they say that um, you know, sometimes the price, the buyout price can go higher, of course, so there's still risk to the upside. But let's take a look, McGraw, and see if maybe there's some juice at the 110s, and then we might consider a call spread. All right, this is LLIT, a big gap up here to 550, but it looks like a penny stock toy to me. SAP. Now, this is a disaster. I mean, this company's been around for how many years? SAP, big old, you know, foreign software company. It's gapping a 118, right? Well, it's gapping right into this little gap area. I'm gonna keep an eye on old SAP, see what it does, but that's a nasty gap. DSS looked like it was on a death trend. Bearish consolidation here in a downtrend. Gapping up to 542. So somebody's, I don't know if somebody's giving them a lifeline or they decided they invented a new product. I don't know what's going on in the news. I don't care. But we'll keep an eye on that. McGraw, you asked me to watch Joe. It's bullish. It's bullish daily, weekly. It's worth watching. Piton. I'd like to get a call spread on dunking. I'm watching this. You know, for a possible reversal. It's not there yet. DBA commodities have been strong. Let's see if that can break out on the daily, weekly. IWS. Alex, you mentioned this one. That's worth watching daily, weekly. New over Friday's high. I like. Snap. We're watching for a short call spread. Coke had a positive. Coke was actually, I think, the cover article or cover story, whatever, on Barron's. So usually there's very, very high odds of a gap up. And, you know, it's relative strength, I guess, being down only pennies, but I don't see one single green Dow 30 stock. Wow. VNM, that had a beautiful close on Friday. AMT, I like this on the short side. It's a bear 1, 2, 3. Hilton, some of these hotels I want to watch, maybe for put spreads. Marriott put spread over, here's a short, WWE. Cone was possible day trade short, WVE, short 5-minute low. Let me tell our swings. Yeah, you all had a nice entry there on the spoofs, pre-market. CDNS, I was watching that possible put spread over Friday's high. Lulu, look at this relative strength. I came close to putting this in as a put spread, weekly options trader. NOW.